When a fleet is lined up in battle formation, the flagship is in the lead, followed by all the other ships to maintain the battle order. The flagship determines the strategy, course, and order of movement when executing combat maneuvers, and this undoubtedly ensures the success of the maneuvers for the entire fleet. This analogy can be projected to existing big businesses that have their flagship setting trends in the US markets. Let's track all the significant transactions of the 5 flagship US businesses in 2024. 3 of the world's 5 wealthiest investment managers got rid of Amazon shares last year, while 2 of the 5 cut their stakes in Nvidia, Apple, and Bank of America. We analyzed information from the most recent regulatory filings of funds owned by billionaire investors, such as Warren Buffett or Jeffrey Yass, and selected the top 5 largest stock sales and purchases by volume. No. 1. Warren Buffett, CEO of Berkshire Hathaway. Synopsis: Berkshire Hathaway is one of the world's largest conglomerates, led by legendary investor Warren Buffett. The company has a diversified portfolio of assets including insurance, Geico, railways, BNSF Railway, energy, manufacturing, and significant investments in publicly traded equities. Buffett is known for his long-term investment horizon and for selecting quality companies with sustainable business models. In 2024, he completed biggest stock deals: Sirius XM Holdings, Domino's Pizza, Occidental Petroleum, Chubb, Heiko. Biggest stock trades: Apple, Bank of America, Snowflake, Chevron, Capital One Financial. The legendary investor ended 2024 with the most cash in more than 30 years. He has consistently reduced his stakes in Apple and Bank of America, though both companies remain Berkshire Hathaway's largest investments, accounting for 23% and 12% of the portfolio respectively. Berkshire also reported that in the third quarter it sold 96% of its stake in Ulta Beauty, which it unexpectedly acquired in the second quarter. At the same time, Forbes named Buffett's most interesting deals as the purchase of a $600 million stake in Domino's Pizza and a $225 million stake in Heiko, a major supplier of aerospace and defense products. Buffett thus joins 8 other billionaires who have invested in Heiko, whose largest shareholder is Florida optometrist and inventor Herbert Wertheim. No. 2. Jeffrey Yass, Managing Director of Susquehanna International Group. Synopsis: Susquehanna International Group, LLP is a private international corporation that invested in ByteDance, the parent company of TikTok. SIG is engaged in trading and high technology and has a number of affiliated entities specializing in trading and investing in various financial instruments: stocks, bonds, energy, commodities, and indices. The company also works with venture capital, research, client trading, and institutional sales. In 2024, he completed largest stock deals: Nvidia, JP Morgan Chase, Bristol, Myers Squibb, Comfort Systems USA, Walmart. Biggest stock trades: SPDR S&P 500 Trust, Invesco QQQ Trust, Kenvue, Apple, MCOR. Group Pennsylvania billionaire Jeffrey Yass is being hailed by the media as the man whose proximity to Donald Trump could save TikTok from being banned in the US. Yass's trading firm, Susquehanna International Group, owns a 15% stake in the social network's parent company, China's ByteDance. Among Susquehanna's biggest deals, Forbes mentions the sale of 69% of assets in Apple over the past 6 months, leaving only 210,000 shares of the smartphone maker in its portfolio. Yass has also taken a pessimistic stance on the broader market, selling stakes in the SPDR S&P 500 ETF which tracks the leading US stock index, as well as the Invesco QQQ Trust. It tracks the Nasdaq 100. Still, QQQ remains Susquehanna's second largest position after Nvidia. It has increased its stake in the chipmaker to 3.4 million shares by September 2024. No. 3. Ken Griffin, CEO of Citadel Advisors. Synopsis: Citadel or Citadel LLC, formerly known as Citadel Investment Group LLC, is an American for-profit hedge fund organization that offers clients a variety of financial options, providing market liquidity and brokerage services to large public companies and multinational corporations internationally. The firm was founded in 1990 by Kenneth Griffin. As of January 2024, his entities manage over $58 billion in assets. In 2024, he completed major equity deals: Atlassian, Charter Communications, Medtronic, Equinix, Marriott. International. Largest stock trades: Bank of America, Amazon, Lovin, Talon Energy, Microsoft. With a majority stake in Citadel Securities, a $22 billion financial market-making company, Griffin would have been a multi-billionaire even without his hedge fund, Citadel Advisors. But the fund's success has made his brokerage business just as impactful. Citadel booked profits in the technology sector last year, selling shares of Amazon, Microsoft, and mobile app developer Appaloosa, the publication points out. The fund's largest purchase was a deal in the same area. It invested in Australian company Atlassian, which specializes in software for collaboration. Citadel has also been actively buying shares in medical implant manufacturer Medtronic. No. 4. Stephen Cohen, CEO of Point72. Asset management synopsis. Point72 is a leading global alternative investment firm led by Stephen A. Cohen, with over $36 billion in assets under management as of October 2024. Building on more than 30 years of investing experience, Point72 seeks to deliver superior returns for its investors through fundamental and systematic investing strategies across asset classes and geographies. We aim to attract and retain the industry's brightest talent by cultivating an investor-led culture and committing to our people's long-term growth. In 2024, he completed biggest stock deals: Comcast, Taiwan Semiconductor, Reddit, EQT, ConocoPhillips. Biggest stock trades: Broadcom, Amazon, AT&T, Fox, Royal Caribbean Group. Stephen Cohen's hedge fund. Point72 has been optimistic but also cautious about the broadcasting sector lately. It bought shares of Comcast, owner of NBC, whose stock rose after announcing plans to sell its cable networks, but at the same time got rid of the securities of another broadcast and cable TV company, Fox. Two other major issuers in which Point72 has cut stakes are Broadcom and Amazon. In October, Cohen, who is also known for owning the New York Mets baseball team, decided to stop trading directly in his fund and focus on management. No. 5. David Tepper, president of Appaloosa Management synopsis. Appaloosa Management is a multi-billion-dollar hedge fund set up by the billionaire David Tepper in 1993. Before setting up his hedge fund, Mr. Tepper worked in the finance industry, including the investment bank Goldman Sachs. His friction with bosses at Goldman started him on his journey to become a billionaire, and he set up Appaloosa after an investment from his peer junk bond trader Jack Walton. The two became partners for the hedge fund that started trading in distressed debt. As of November 2023, Mr. Tepper's net worth is $20.6 billion, and he is a rare hedge fund boss who also owns not one, but two sports teams. Becoming a billionaire is no easy feat, even in the hedge fund industry, and some of Mr. Tepper's most famous bets that have made him rich were distressed sectors such as banks and mortgage-backed securities during 2008, and big stakes in mega-cap technology stocks. In 2024, he completed biggest stock trades: PDD Holdings, Lyft, Vistra, JD.com, NRG Energy. Biggest stock deals: Nvidia, Meta Platforms, Microsoft, Oracle, Amazon. Like Cohen, David Tepper is a professional sports club owner. He has a controlling stake in the Carolina Panthers American soccer team. The value of this stake has increased significantly over the past 2 years, despite the team's disappointing results on the field. Tepper's hedge fund, Appaloosa, booked profits on a number of stocks from the Magnificent Seven, including Nvidia, Meta, Amazon, and Microsoft. And his biggest purchase was Shanghai-based PDD Holdings, which owns online marketplace Temu. There's also mention of another Tepper deal in China, the acquisition of shares in JD.com. In 2025, should aspiring investors follow the lead of flagship US businesses and adopt their expertise? What dividends in 2025 these deals will bring to the 5 largest US funds and their leaders, we will definitely track.